Intersection, intersection, magazine, magazine. Intersection Magazine Podcast. Welcome to Intersection Magazine Podcast. This episode is devoted to an event I attended. It was a crypto and virtual asset sector forum put together by FITSPA. We had quite a number of people presenting as well as a panel discussion. So this is really going to be a summary of the event as I saw it and what key insights I derived from the event. Once again, thank you for listening. Thank you for subscribing. I'm your host, Nicholas Gianda, for the Intersection Magazine Podcast. So apparently this was not my first time engaging with FITSPA, and I learned this at a much later stage when I suppose the chairperson spoke. The chairperson is called Kenneth Kwesiga, and I have featured Kenneth Kwesiga on our podcast where he talked about his firm IoTech. We hosted Kenneth Kwesiga and IoTech at their HQ in Nakawa. Nakawa is a business hub as well as the home of the National ICT Innovation Lab, run by the government of Uganda in collaboration with the ICT Ministry. The National Innovation Hub is a massive step ahead in terms of the government's decision to establish itself as a key player in the sector and in the entrepreneurship, technology and innovation space. For a long time, the government, through its officers, has had to depend on various existing structures through different hubs and players. And so this was a major step in terms of setting themselves up to be in the space. So one of the first parts, of course, was a message from the Vice Chairperson, Doreen Lukandwa. And then there was, in which she gave the opening remarks, and then a presentation by the Financial Intelligence Authority by Edward Amanyire. It was pretty much the representation of a report on risk assessment of virtual assets in Uganda. This was quite an extensive session covering the work that the FIA does, its collaborative partners in terms of its work with government, as well as identifying key partners in the work that they do. Now, Edward began by giving us a story, really just to describe some of the challenges that exist in the space. So he's described a story about a young man who sets up an NGO in one of those major tragedies that was taking place in the 2020s. He set up a support system where people would send small amounts of money to help fund either orphans or people in distress or people coming out of disastrous situations. Now, he used the extensive infrastructure that exists with virtual assets and crypto, for example, to move this money from the various places he was receiving it, turning it into crypto, and then moving it from account to account, and eventually withdrawing it and sending it to Syria to fund terrorism. So Mr. Edward Amanyia was helping us understand how organizations like the Financial Intelligence Authority think when they engage in the space and when they do their work. So one of the things he mentioned, and it would really be good for you to probably find a way of getting in touch with him in terms of understanding how your support organization or your fintech that is working in the virtual asset space can connect with the FIA to make sure that you're compliant. But he talked about, for example, identifying vulnerabilities, how organizations or businesses that are in the funding space can establish systems where they look at accounts that are handling suspiciously large amounts of money, finding or getting access to databases that are have wallets that are flagged, and if those wallets are having transactions taking place on these businesses' exchanges, on where they can flag these activities and report to the FIA. He talked about controls, risks, their work in registering providers, their work in identifying threats, their work on the infrastructure that they've put in place for national risk assessment. And then he said something interesting, that no, not only can you have a national risk assessment plan, but you can also have a sectoral risk assessment plan. And he encouraged, for example, different associations that were in these spaces to have conversations with different groups for a specific question that arose about, for example, identifying or linking systems where you can verify identity. One of the key questions that arose about the security or the use of some of the systems was around KYCs, or know your customers, and how many users were unwilling to make use of these systems. And then, of course, there was the issue that we normally have a national database in which all of this information is stored. But many of these organizations or businesses that were in the virtual asset space were having difficulty connecting directly with already existing databases so that they could use those systems for verification and for better protection. So he made the suggestion that these providers, there's in the fintech space and in the virtual asset space, should get together with their associations and then write letters to the national authority, or NITA in this case, and see how they can engage with data access. He also talked about some of the data protection issues. Of course, just like Doreen Lukandwa, the vice chairperson of FITSPA, he talked about how about 1.1 billion USD had gone through the various channels in the country, and he said, or he described this as a conservative estimate, especially at the time when they carried out this program. So that's quite a substantial amount of money moving through the system. Mentioned some of the partnerships. It was good to see a little bit of what the infrastructure looks like from Ministry of Finance, Bank of Uganda, Capital Markets Authority, a taxation body, the Gaming and Gambling Board, etc., etc. Now, they also talked about some of the partnerships, for example, with the National Crime Bureau, the challenges they face security-wise and exposure-wise with custodial and non-custodial wallets, which are some of the methods in which people store the currencies, the cryptocurrencies, or the virtual assets, and how they're dealing with some of these challenges in terms of exposure. For those who were in the process of putting together solutions or developing in the space, the Capital Markets Authority mentioned that they were working on having sandboxes for testing. This is environments where you can put together your applications, especially when they're still in the testing stage, and have a chance to see what users are doing with those products in a safe space, and also naturally with some kind of financing. So his talk was, his presentation was handling a lot of those issues. Now, the other issue that existed was about the challenge of regulatory arbitrage. And then, of course, the issue that exists where some people were feeling like their fintechs were registered or domiciled in foreign countries. How were the rules going to be used? Regulation rules for those who are in other geographies, and how that would work for them in Uganda. So there were quite a number of issues that were covered, but the question and answer session was probably very useful in the sense of getting listeners and attendees familiar, for example, with policy issues, because we had two panel discussions. The first one was around policy, market activity, risk, and regulation. The second one was about use cases and opportunities. And so the different groups that were represented, or either on the policy side, like the Capital Markets Authority, the Financial Intelligence Authority, in terms of market activity, risks, and policy and regulation. We also had the CEO of MUDA, Suleiman Muranga, who has been active in the space for a long time now. And of course, this was moderated by Doreen Lukandro, the Vice Chairperson of FITSPA. For those that are interested in case studies and opportunities, we had Yellow Cards Isaac Wabuge, Wensino Wagaba of Brainwave Technologies, and Ian Mobiru of RealWorks. This was moderated by Flavia Kasenge. Now, an interesting story from Brainwave was about how, for example, their company got scammed out of about 100,000 USD. So it was sad to hear that, but of course refreshing to know that even the people that are participating in these spaces that have been successful have gone through, in a sense, a baptism of fire. So what we'll do, of course, is we've just presented the material in brief, but we've also, we're going to give you clips of the question and answer sessions that took place after major discussions. And also, there was also a part where we had a representative from the Uganda Revenue Authority talking about what different forms of taxation were going to take place for those in the virtual asset and crypto space. So it was a very intense and fruitful gathering. Actually, one of the most interesting conversations that I had was about use cases. It was presented by Isaac Obuge. He talked about last mile delivery and For those of you into the logistics space, you know that groups such as Jumia that are doing delivery in the country usually struggle with what they call the last mile. What happens, for example, this is normally easier in more developed countries that have a postal system, either that brings packages straight to physical addresses in homes or to post office boxes that are being utilized by majority of the population. But what happens in countries that are less developed in terms of how to find people's homes, and maybe sometimes people are living in unplanned communities, companies that are doing delivery either for products or for food normally struggle with what they call the last mile. Now, I found it fascinating that you can also make reference to the last mile in terms of payment systems and fintechs. And so, what the Yellow Card team was talking about was how they were partnering with different groups, business groups, for example, in Yellow Card's case, with this, what do they call? That they call? They work Western Union, yes, Western Union. And what normally happens is, for example, we can talk about the success of M-Pesa in Kenya or mobile money in Uganda, whether that's your money getting moved through your telco. But it's a little bit difficult when you want to make payments to, for example, crypto exchanges, because many of these make more use of visas and maybe PayPals and systems of that nature. Now, one of the challenges we face with PayPal, for example, is there's a limit to which countries you can make full access of PayPal. And what some users have found is you're better off registering a PayPal account in another country and then using that to route your money wherever you need it to be routed. So with services like Western Union, you find there's a gap that exists where you need to get money to people in literal last mile. So what YellowCat has done is to create partnerships where they make that happen. They provide an intermediary where groups such as Western Union that don't necessarily have access to local systems, whether that's your Airtel monies or your mobile, or your MTN money, mobile monies, or your M-Pesas, can have a system that allows them to engage with these fintechs and the systems that exist in these geographies. So I found that fascinating that you can have, or that you can talk about last mile, not only in logistics but also in fintech. So that was really eye-opening. So what we'll do now is we'll take you to these brief conversations, the Q&As that took place, and we'll let you listen in so that you can appreciate the content that we were also able to engage with. I'm your host, Nicholas Kianda. Once again, thank you for listening. Thank you for subscribing. This was the Crypto and Virtual Assets Sector Forum, put together by FITSPA, hosted by Protea Hotel in Kololo. Once again, thank you for listening. Thank you for subscribing.
Minutes, and I'll try to take a shot at some of these questions. And the first one was about the challenges of regulating decentralized finance operations. This is a highly technical question. I'll just give comments. There's usually a tendency to associate blockchain with decentralized finance. But if you've been a student of developments in this space, there is another school of thought which is coming up, and it is called regulated liability networks. The coming on board of this school of thought shows you that the practice has not yet firmed up the position on where to go from centralized finance. I leave it at that. It's not yet something that is up for debate on how to regulate it, because no one is regulating it currently. The other was about implementation timelines. It was asked twice. This I will just make a personal prediction that hopefully, if all goes well, before end of this year, we'll have the law in place. That is based on the work that we've done so far. Please quote me that it's a personal prediction. I wouldn't want to be brought to book that I made a promise on behalf of government. The other was about the concern about double regulation. What makes the bill that is currently working in progress somewhat interesting is that it's one of the laws that is going to come, a financial sector law, which is going to come into force after the putting in place of the Financial Sector Stability Forum. That forum, as I explained, brings together all financial sector regulators. And one of the purposes of forming of that forum is to bring cohesion and harmonize the practices. To cure things like, I'm regulated by Bank of Uganda, I'm regulated by CMA, I'm regulated by so on and so on. And whenever time comes for licensing, I have to apply the license with Bank of Uganda, CMA, and whatever. So my personal note on this one is that watch out for the draft bill. Once it comes out, ensure that it provides for harmony as far as aspects like licensing and monitoring of market conduct is concerned. How can young people, what can they do to ensure that we have a prosperous virtual asset space? Study the subject, become a subject matter expert, so that when the space opens up formally, you can play into it. How to diversify the ecosystem, taking into consideration all the use cases. This, Edward partly touched it, but I will also make a few comments on it. The approach, as you see, if I remember very well, Kenya is currently suffering from the effects of failure to crack the question around who are we regulating? Are we regulating the virtual asset service providers, or are we regulating the assets themselves? It has caused a bit of confusion in Kenya, and if I'm not mistaken, Ghana or Nigeria, one of the two. So again, this is something that is still under discussion, but most likely it will be regulation of virtual asset service providers, but also regulation of the issuance of the assets. It was most likely to stop at that, not to go into the nitty-gritties of itemizing which assets can be offered in the market. Because the market, once you do that in the law, you are kind of stifling innovation. We want to let it open, and the market can innovate as long as they are innovating within the eco framework. And that's why we have what we call sandboxes. Sandboxes, you come in with your idea, and once admitted, it can be studied, and then to see if it's something that can be offered to the general market. And we'll continue as Capital Markets Authority to apply the sandbox, even for use cases that are coming out of the virtual assets. In terms of parting remarks, like
once that is done, We raise the $50 million, we construct in the next 2 years, we have a resort, high-class resort, and then it's paid off from the tokens, put on a DEX and be able to be traded. And therefore people will be getting more tokens as it's trading while the resort is making money in the long run. Now when you compare that with a traditional banking system, if you borrowed $50 million, trust me, by next month, they need an installment. And the installment will be even before you put the first brick, which is very difficult. So in innovation, when you're doing your application for betting, come up with a tokenization of your own. And if you need help, please come to me. I can be able to help you create your own tokens that you can use in exchange for USDC and USDT. And you can only do a transaction when you have bigger volumes, so that you take advantage of the cost of transaction. I hope I have answered your question. Thank you.
Thank you so much.
Next one is going to be South Africa, and I think I'll also take Nigeria. If you look at what South Africa did, they saw that the market was moving. They could not be able to stop what had been started, okay, in terms of utilizing virtual assets. So for them to make sure that they don't stifle innovation, what they did was to go ahead and regulate, create a space where people are able to come in with their ideas and then be able to trade, okay? At least they're able to see what's happening in the space, and they're able to support the innovation. In Nigeria, what happened is that, which I feel is what sort of what's been happening here, is they first of all was to sort of stop, to prohibit virtual asset service providers or cryptocurrencies in the market. But then later they saw that they couldn't stop it because they have a lot of diaspora, people, and a lot of money was coming into their country. Okay, but then they went ahead to create a law that will help them regulate the industry. What does that mean for us? I think that comes back to us as Uganda, as the regulators. I feel like the time is now. We shouldn't waste more time. I love the question that came from when, but I saw it was even answered when they left. Okay, but the time is now because every single day there is a new solution that is coming up around cryptocurrencies. Recently, I interfaced with someone who was doing betting, but then what they wanted was, because mobile money is expensive, okay, they said, you know what, I can support this company to receive crypto, okay, and people are able to place their bets. Can you onboard me? Of course, there's the law, okay? You look at that side. So I talked to him and it was very clear, because like it or not, a crypto or virtual assets or stable coins is mobile money 2.0, okay? There's no difference. So when like the last gentleman said there's going to be competition, there's no competition whatsoever between stable coins, mobile money, and the traditional banks. No, this is another rail, okay? And people are running to it because of the convenience they see, because of the speed they see. Because I'm able to send someone money, in an island somewhere, in the Bahamas. He's going to receive the money without anyone, any middle player in there. And it's going to be very cheap. So what I see is that the faster we go in as a country to accept this and have it regulated so that we can promote innovation, the better for all of us. Thank you.
Thank you so much.
but they never banned people from using virtual assets. People in Egypt, me, I'm sending to my friend Dennis, I send to him. But if the security, the law enforcement of Egypt finds out that I am no longer just transacting on a personal level, if Sulaiman is giving me, another person is giving me another, and I am sending, I've become like a remitter. I'm sending to Japan. You see, if I go to the Forex Bureau, they are expensive. If I go to the bank, they are expensive. You help me send this money to this address in China, to my person. You're now doing services of a virtual asset service provider. You are now a financial institution. Therefore, you must collect the KYC, even though I know that you are my wife. Because you are what? You're a financial institution, and you own the financial institution. But because somebody is opening an account in your financial institution, you must know who that person is. That one, I don't know how else to explain it. There are personal transactions, peer-to-peer, which are not regulated. But transactions you're doing on behalf of another person. On behalf. If I asked you, this money you sent to China, was it you, your money? You said, no, I was sending it on behalf of so-and-so. Where is their KYC? You must have known who they are. You said, no, that's my friend, I know him, I've been with him. No. You have taken on services of a virtual asset service provider. And that's now where the question of licensing comes in. Of course, law enforcement will ask you, do you have a license? Right now, the regulatory framework, there is no license. So you tell them, we have no license. But also it's not illegal. We are working, we are partnering with government to see that the legal framework comes into place. But the responsibility is still on you, because there are still global standards that you must apply, even in the current regime. Remember in 2020, the Anti-Money Laundering Act was amended. On the second schedule, there is a list of individuals we call accountable persons who must comply with anti-money laundering and countering of financing of terrorism obligations. Virtual asset service providers were added onto that list. So the bare minimum would be that you are knowing who your customer is. You know who they are, and if law enforcement comes to you, you have a register. You said, in the last 6 months, these are the 3,400 people who have transacted with my system. And here is their KYC. And here is how I validated it. Now, there was a question on whether what government is doing to ensure that private sector is able to verify using NIRA identities, it might be NIRA or passport or others. Again, you have to come together, organize yourselves as private sector. The Uganda Bankers Association did it. All other associations that are recognized, I believe FITSPA is recognized, you come together and say, we have this number of members that are collecting transactions, or that are doing transactions on behalf of individuals, and they need access. Tell me that you wrote that letter to NIRA as an association, and NIRA said no. Ziana, tell me that you wrote, and NIRA said no. Then we begin the conversation at that level. So, that's what I can say. And of course, there were other questions. There was the question of why did we ask questions in the banking sector, and yet they are not involved in the space of virtual assets. We asked everyone. We asked the virtual assets space. We also asked, because the methodology requires you to ask all the players in the financial sector. And the banking sector fell in the category of what we call the traditional obliged entities. Because they knew that, whereas in Uganda there might have been a limitation that the central bank has limited its licenses to interact with the virtual asset space. Of course, to protect the Uganda shilling, it goes without saying, to protect the Uganda shilling. You still must ask them the questions. That in the event virtual assets transactions come in your space, do you know how to deal with them? Do you know how to handle them? Do you know how to identify the beneficial owners behind that specific transaction linked to virtual assets? So it was part of the methodology. Without knowing or without hearing from the traditional obliged entities like banks, mobile money players, you would not have a complete perspective of the ecosystem. I think I answered the question of taxation will be answered by our colleagues from URA. KYC, I think we are now clear. Trust is okay between your individual, private, personal transactions, because I am sending so and so. But the moment you're sending on behalf of another person, or holding custody on behalf of another person, or issuing a virtual asset to others, then you are a financial institution, and therefore you must collect KYC. Meanwhile, this is supposed to be happening as we speak, because there is an anti-money laundering law that already has you in sight. It's already there. It's already there. The law is going to come for prudential, for regulation, for the whole thing. Are we together? There was a question on that crypto is broad, blockchain technology is broad, and crypto is just a small segment. As government, are we looking at the other use cases beyond crypto? Yes, there are other committees that are looking beyond crypto, beyond the financial sector market, but our space is simply limited to how blockchain technology is used in the financial space. But of course, there is the general Fourth Industrial Revolution. Ministry of ICT has a full committee on looking at how blockchain can be used even in other spheres of the country, agriculture, land, and other spaces, hospitals, and everything like that. And there was a question on whether regulation will not stifle innovation. Obviously, you know, we are very mindful. We are very, very mindful that we should never create a scenario where there is over-regulation or under-regulation. It has to be a sweet spot. The regulator, the innovator is allowed to innovate. You can wake up in the morning, if you're so talented, you're a developer and you know how to do your thing, and you develop a very good system, a very good blockchain app, but it is just on the shelf, it's in your garage. And you wake up tomorrow, you say, I am bored, let me do something else. And within 2 weeks, you have like 4 or 5 systems on your PC. I know most developers in this room have done that. But then you take the next step. You say, I want to launch this into the market, and I see how it will work. That's why the law has to provide for such scenarios like sandbox licensing. You have something that you want to test, we give you an environment in which you test it, and we see. And it's unique, and we create the parameters and the procedures and the requirements. And you meet all of them, you test it. That is all part of innovation. And the law will surely provide for sandbox. I think the rest will be answered by my colleagues.
Once that is done, we raise the $50 million, we construct in the next 2 years, we have a resort, high-class resort, and then it's paid off from the tokens, put on a DEX and be able to be traded. And therefore, people will be getting more tokens as it's trading while the resort is making money in the long run. Now, when you compare that with a traditional banking system, if you borrowed $50 million, trust me, by next month, they need an installment. And the installment will be even before you put the first brick, which is very difficult. So in innovation, when you're doing application for betting, come up with a tokenization of your own. And if you need help, please come to me. I can be able to help you create your own tokens that you can use in exchange for USDC and USDT, and you can only do a transaction when you have bigger volumes, so that you take advantage of the cost of transaction. I hope I have answered your question. Thank you.
Thank you so much.
Okay, so I'll just take the last couple of questions. I'll just combine all of them because I think they're intertwined. So there's a debate we've been having with the central bank. Used to be Director National Bank Supervision, now is the Director of National Payments. And his argument has always been mobile money is a stable coin. Why do we need stable coins in Uganda if mobile money is a stable coin? And when you look at the fundamentals, there's an escrow that backs each unit of account. For every mobile money in circulation, every shilling of mobile money in circulation, there's a shilling in the bank, in an escrow. Same with stable coins. For every dollar out there, there's a dollar inside a bank account somewhere, or a US Treasury bill backing it. So you can easily argue this is digital money, it is backed by an escrow, and there's some sort of regulation governing its issuance and distribution. So, yes and no. Mobile money is stablecoin. Stablecoin can also be interpreted as mobile money. However, what differentiates blockchain-based e-money versus what we currently have is the decentralized nature. What blockchain-based currency units of account do for finance is what WhatsApp has done for instant communication. Whereas me sending you a WhatsApp message, whether in this room or whether you're in China, doesn't make any difference as far as WhatsApp is concerned. As long as we're both on WhatsApp, it's instant, it is on the same network. It's the same way that blockchain-based or virtual assets or cryptocurrencies have done for finance, right? Whereas previously, if I'm sending you an SMS, if you're in Uganda, it will charge me 50 shillings. If you're in China, it will charge me 220, you know? So there is that variance that blockchain enables. So blockchain allows for interoperability at a global scale. Whereas mobile money is just within a certain jurisdiction. If you don't connect with MTS APIs, you cannot interact with mobile money. But with virtual assets, blockchain-based virtual assets, it is globally interoperable. So anywhere, anyone, anywhere can interact with it, can connect with it, and seamlessly transact. So that is the key difference between the two, and that's why stablecoins have picked up at a global level. Now, because of the unique characteristics of these virtual assets and the blockchain, multiple opportunities have come up, right? And these opportunities really should be looked at from a local environment perspective. I always tell people that you're not going to build another Facebook in Uganda. But Uganda has its unique challenges that allow for unique opportunities. And so, what do people like, or what are people interested in, or what are the challenges people are facing? We have a lot of traders, so cross-border trade is low-hanging fruit. When people make some money, what do they want to do? They want to invest in real estate. So, digitizing of real estate, enabling transactions on the blockchain for real estate. And when they want to enjoy life a bit, they want to travel. So those kind of applications, those kind of opportunities, just the digitization of those sectors will really enable you to find a place in this new emerging space. But at the same time, we're in a global economy, right? So new media, influencers, digital marketing, and business process outsourcing, especially with the rise of AI. So tying blockchain, virtual assets, AI, and the fact that we're in a global economy then allows you to, when you put all those things together, it allows you to then look for the opportunities that are going to come up and that you can take advantage of. Thank you.
I wanted to give a little bit of commentary in terms of bits and pieces that were mentioned by the Capital Markets Authority representative, as well as what was said by Brainwave Technologies' Wensi Nwagaba. Now, in his presentation, the CMA representative, that's the Capital Markets Authority representative, Dennis Mozito, talked about, for example, how an individual, or we can look at the example of a hotel, such as the one that was hosting us. Shout outs to Protea Hotel for doing a fantastic job. Someone came up and said maybe they wanted to buy Protea Hotel, but you can't find one specific investor who can foot the bill. So the Capital Markets Authority representative suggested, for example, a system where you say, let's value the hotel and identify or break up its value into maybe 2 million units. And then let's make those units available to the public so that they can purchase the hotel in full. Now, this whole idea was taken up by Wensi Nwagaba, Mr. Wensi Nwagaba of Brainwave Technologies, and he spoke about, for example, how they're working on putting up a facility in Kabale, a part in western Uganda. Now, he talked about how they needed for this project 50 million USD to get it started. So the solution they had come up with, instead of going through the standard methods of approaching a bank, was to make tokens available to a set amount of people. So you make these tokens available, you value your tokens, say they're worth 50,000 shillings, you value them based on what the product will be once it's complete. So once you make those, you invite those people to be part of that tokenization process, they finance the construction of the hotel until it's ready to actually start making money. And then not only are they financing the hotel, but also they're going to be part of the profits. The profit sharing that takes place once the hotel is off the ground. And he talked about the difference that exists between that funding model of tokenization and the funding model that exists with standard banks, where, for example, once you have applied for the loan, after maybe a year, there's a certain expectation that you will start paying back the loan, even if you're mid-construction. And so that was an amazing insight in terms of what exists in the space for those who are interested in finding innovative ways to raise finance. So that's another idea that stood out. I mentioned before the subject of last mile delivery in relation to logistics, but now also in relation to fintech, and then now, of course, the idea of tokenization. So that's combining two ideas, helping shed a little bit of light amidst the Wagava's conversation.
Intersection Magazine Podcast.